In this video, we're going to do a market overview. Now, we're currently trading at 575.92 here on SPY, or at least that's where we closed. We'll see how we open up for pre-market on Sunday at 6 p.m. But you can see just huge pullback in here ever since those mid-Februaries. And actually, we had a green day today, low of 565.63, high of 577 in here for our last trading session. Let's go to the 15-minute chart. We can kind of see what we're looking at here. So you had that opening pop in here, really couldn't do anything with it from there. That huge pullback right off the 565, that 566 mark is really where we had our support. So kind of right around that area, 565 to 566, right off of that, and then just rips right up again. And then we're kind of sitting around this 575 area in here. So we did have those highs in there of that 577.31 and really consolidating right around that 575 area. So if we go back to our daily chart, where does that put us? Well, we're kind of sitting right on this 200 SMA, right? So that is going to be an immediate support for us. If we do stay above it, it's currently trading at 571.84, but really anything below that, it is going to be that 565, that 566 mark. Resistance wise, we mentioned that 575 is kind of like a magnet, right? But if we can stay above that, then our next resistance is going to be that 580 mark. And then above that, it is going to be this 9-day EMA in here. Now, if we can compare SPY to the Qs, the Qs had a couple days where we had harsher pullbacks in here. So same, obviously SPY and Qs, they're going to be basically the same, right? But these two red days in here, this is a $19 down day and this is a $20 down day in here. So a little bit harsher pullbacks in here just for the tech, all in all, but really trading basically more or less like the SPY, the recovery. Just so if you think on days like this where you had a harsher pullback than the green days, you would have a harsher run up, but really that's not really what happened, right? We just happen to have one green day here on the 4th where the spiders ended up closing red, right? So that's really the only difference. But all in all, same thing in here. If we open up the 15-minute chart, we can see what happened in here. It is more or less the same story that we just said in SPY. A little pop in the morning, drop back down, and then went back up again, and we hit those highs at the 44.93 mark in here. It was our highs of the day after we hit our lows back here at 480. And the 493 highs came at the end of the day. So the spiders was more or less, you know what I mean, like hit that all time or that day high around that 2 o'clock area. We hit ours in the last 15 minutes here on the Q. So that's really the only differences in here between the two. Other than that, on the daily chart, what are we going to look at in here? Well, we're trading below the 200 SMA on here. So spiders, we were sitting on the 200 SMA. We were trading above it here. We're still below it. So going forward, that's going to be our first resistance, and that's going to be 492.85. Above that, we're looking right here at the 495 level. And then above that, it's going to be that big psychological 500 level or this 9-day EMA, whichever one does come first. But it's probably going to end up taking place right here at that 500 mark because that was a huge problem for us in the past. And it was also a big support right here, as you can see, as recent as January. So oversold in here, oversold RSI wise in the spiders as well. You are under the 200 SMA in your Qs. You are over top of it in your spiders, but more or less just big drawdowns in here. So let's take a look and see what the bonds have done. They usually trade inversely with the markets. And we mentioned this candle here in our video that we did on TLT about a week ago. We mentioned, hey, are the bonds seeing something in here that the market is not aware of yet? Well, the very next day, you had that red pop in here, right? Or you had that green pop in the market, but you also had a green day and a green day here in the bonds. So once you see that, you go, okay, well, that's even more fishy than just this doji here that was placed, because you get this green run up, right, and trading inversely with market green, or you get this doji right here, and you think, okay, this is a reversal candle. You got some indecision in here. That means TLT red, markets green. Well, then all of a sudden you had 2 days of just green in the markets with green being in the bonds. So that was kind of fishy as well. And then you had the pullback with the market here. So not really trading super inversely with the markets in here. Like we always mention, the bonds trade inversely with our markets, but you still have that positive drift. So currently we're kind of trading with the market, right? But we did have a pretty big drawdown in here, about a $2 low high 91 to 89 in here on your bonds. So currently we are underneath this 9-day EMA. So that's going to be our first resistance. Currently, that's going to be at 90.75. Above that, it's going to be that 91.29 mark. And that is our 38.2 fib level. And then below our current, the low that we hit in here of 89.99, the next support is going to be that 88.4 in here. And it looks like we did come down and we are filling this gap right here on the daily. So if you're looking at it technically, you can say, yes, we did fill it. So then we could get that positive drift again and pull back the markets, or we can get this positive drift in here with the markets as well, right? So we'll have to see what happens if TLT is going to trade inversely going forward. So keep an eye when you're looking at your kind of markets. That's kind of, we always do a market overview, right? So we're always looking at S&P, we're looking at NASDAQ, we're going to look at gold, and we're looking at our bonds, right? And here we're just kind of looking at the ETFs of all of them. Just kind of, it's easier that way. So now we're looking at gold here. This is your GLD, currently sitting on that 9-day EMA. That's going to be trading at 268. The next resistance in here is going to be up here at the 272 mark. Our supports are going to be at 266. And then below that, it's going to be this lower trend line here, right around that 265. So 9-day EMA running away, as you can see, for the past couple months in here from this 200 SMA. So we need some consolidation up in here. We got a nice little pullback in here from that mid-February pullback that the kind of the whole market had, right? Really everything. Saved ourselves down here with this green candle here with this long lower wick showing reversal signs. We did that, and now we're kind of going back here. We had this doji right here, and then now we had basically a indecision candle here placed that we ended up in the red on this last trading session. So consolidation coming in here on gold. Again, TLT, we have to kind of figure out what is going to go on the market. Is it really telling us anything that could happen in the markets? Well, we're not quite sure. But we did trade with the markets here for a little while, and then this last day we kind of traded against it, but we still had a little bit of that drift right with us. Our spiders, we are currently watching that 575 level, and then we are also looking at this 200 SMA that we're currently sitting on in here. So all in all, just just a lot of pullback in the markets. You had 2 days there where the Qs were kind of trading more harshly than the spiders. You had the bonds trading inversely like they normally do, but yet you still had a couple of days where we traded green with the markets and we traded red with the markets. And you also had gold in there just kind of rising this whole time. So hopefully we can get some gold consolidation, we get some TLT pullbacks, and we get the market kind of firing up again, right? Your spiders and your Qs as we get ready to head into this next earnings cycle here in the next couple weeks. So again, all in all, what are we looking for in our spiders? Looking at this 200 SMA, see if we can hold it. Qs, what are we looking at? We're looking at the 200 SMA to see if we can breach it. And again, we are pricing in that $7 expected move in your spiders by March expiration. You're getting some pretty big swings in the spiders every day, ever since we had those big pullbacks in there. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.